Just wanted to point out the information we provide today is of a general advice. If you do want some more information, please seek some professional advice.
Welcome to the latest episode of the Retirement Living Your Way podcast, where we have real conversations with Troy Theobald and the team from RFS Advice. My name's Greg Black, and Troy, welcome to the studio today.
Thank you for the afternoon. Even got a cup of tea for a fireside chat today.
Absolutely, and I think it would be an understatement to say we live in interesting times at the moment. When you have a look at what's going on at the moment with the war and obviously financial markets, oil, it's pretty crazy out there.
All sorts of things in 2026. It certainly tested whether people have had a good plan or whether they've sort of stumbled along the way.
Yeah, and look, and I thought today would be really good to touch on the latest episode that you did with 4CRB on the Retirement Living Your Way monthly talkback show, where we sort of spoke about retiring in uncertain times, and I just thought it was worth sort of unpacking that a little bit because it was a great show, and I just think that there are a lot of people that are getting ready or thinking about retiring. We're seeing it in our office. We've got a lot of clients coming through. So I just thought, would that be something we could sort of have a chat about today?
Yeah, the thing is everyone needs to retire irrespective of what happens, and uncertain times are actually always there, which, in 2026 does sound a little harsh because they're quite uncertain at the moment.
Oh, absolutely.
But you've worked a lifetime to get to this point, and you don't want to let things beyond your control too far.
Yeah.
All the voices you start hearing, if markets dropped, does it mean can I retire? What if inflation keeps biting? What if I run out of money? What if I retire and something goes wrong? All those little voices sort of get louder and louder if you don't have a really good plan or a foundation.
Yeah, so I think the thing that really sort of stood out to me when you went through the material and you were speaking with Colin on air was, I guess, some of the steps and some of the thinking that people should be sort of looking at, and you sort of broke it down to a number of key points. So do you mind if we sort of maybe unpack those, because there will be people that would have listened to the show now.
Yeah, and we'll have the handouts there. We even made a bit of a flyer there as well for people to print out and just run through their own situation at home. But, step one is really moving from that market timing to a lifestyle thinking. So instead of focusing on what's happening in markets, what do I need my money to do and what would I like it to do? And trying to get a bit of clearer direction around that. Life without handbrakes, what would that look like if I wasn't looking at markets, wasn't worried about that and sleeping easily with a bit of certainty? What would I actually like to do? And really letting those voices get louder.
So when you're sitting down with clients, how do you break that up?
Yeah, so you got to cover off on the essentials and sort of that bucketing strategy there, which the essential spending, that's the basics. That's just your housing, your costs, your utilities and everything there. Then the important spending, so things that give you lifestyle comfort. Might be eating out, could be hobbies. Quite cheap. Our habit we like together, which is now running, I've taken up there, although shoes weren't cheap, but compared to, if you don't need anything else, there's a lack of excuses, unfortunately, for me every third day when you ask, have I gone for a run? But once you're out there and doing those sorts of things, and then there's that optional spending, and that's the luxuries, the big travel, the renovation, the new cars, those larger big ticket items. Because I had someone in the other day, and they were sort of just caught in the fact that they'd had some sort of spending habits that were large ticket items. Mm-hmm. Then they had some housing items that came up, but they shouldn't continue out. Like you shouldn't just sit there and multiply that expenditure by the next 20 years. They have been that one-off and that optional or occasional spending.
And do you find clients, do they have a good grasp of what their day-to-day living expenses are?
Most are pretty good. It's just in these times people worry about everything. The TV's scary.
Yeah.
There's all sorts of uncertainty going on. It's recognising that is uncertain. In markets, 1 to 2 in a 10-year period will be a bad year. This could be it that we're in. I mean, it's not a great year so far. Returns haven't been great. You don't multiply the worst year of return out and go, oh, well, I'd be better off in cash. I shouldn't have invested, all those sorts of things. People can get into those habits very easily.
Yes.
And it's just bringing back to that, basics of let's make sure, the spending, we've got the basics covered. Let's pull back on a bit of optional spending if you're worried, but it doesn't mean we have to put off the retirement potentially.
Yes. And I know, sort of following on from that, you're very clear on the structure, how you're actually structuring someone's, effectively the rollout of their retirement, what the sorts of things that they should be thinking about as well.
Yeah, it's having that structure over predictions, we call it there. So having a structure in place rather than predicting when are things going to end, when are things going to improve, when will oil price come down, all those sorts of. Instead of trying to predict, let's have a structure to pay for it going. I've got my base needs covered, so we'll draw enough out to cover that. The middle layer, we've got some income to cover that, bit of stability around that. And the longer term scenario there for those bigger items, well, in those years that markets aren't as good, if we've got if we're in good health and we can map things out, all right, well, rather than panicking about that overseas travel and everything, head off. Was there somewhere in Australia you wanted to go? Just go do that.
Yep.
Let everything settle down. Let things continue back to where they were before. And when you've got a bit of certainty and clarity as to what overseas travel and costs are going to be again, put it back on the radar, make it a priority and move on from there.
So just from a day-to-day perspective, are you finding, obviously, the clients that have been with you for a long time, they understand the process, they understand the importance of the right structure, and you've been working with them. Do you find that they're still touching base through these periods? Because I know we're checking in all the time.
We still check in because you've got to remind. They don't happen all the time. You don't have significant pullbacks all the time. You have some little ones and people might check in, but larger ones, no, it's just reminding people again, having those liquidity buffers. So you're not selling things at the wrong time. We remind our clients that's why we have sort of 2 years cash buffer. That's why we separate the income and growth. We expect markets to drop. That's why we reweight the portfolio each quarter. So all of the things you sort of tell them about in good periods, when you have these negative periods or tougher times, that really brings it to the front of mind of, that's why you do that.
Yep.
And we sort of felt it really at the start of 2026 there, where some clients are coming in, returns aren't as high as they were previously. They're not. We're simply not going to buy and hold what's sexy and running, and that's what's been absolutely belted. Like some of the smaller companies in Australia off 20+%.
Yeah, wow.
Now they look fantastic. They thought they were great when they're up 10%. Now they're off 20%. It's like, you're a long way below having good, solid blue chip investments.
Yes, and that's sort of sorry to jump in there, but that's also consistent with, I guess, our approach, and obviously chairing the investment committee for RFS Advice. You are quite conservative by nature. We deal with, conservative type clients that are, predominantly self-funded, so their capacity to earn more. So that sort of all feeds into it too, doesn't it?
For our clients, it'll be their life savings. They can't make it back.
That's
they
right.
don't want that risk. So we don't want something.
So we're not chasing.
No, we don't want illiquid funds. We're not chasing the highest of returns. If they want to have some more, we'll call them alpha generating in our lingo, but they want to have some that earn a bit more over there.
Dumb that down. Come on.
In real terms and human language, then we can put some of that in the portfolio, but it's not a crazy tilt. It's 5 or 10% into some of these strategies. It's not huge amounts there.
Yeah, and so on that, when we're looking at the portfolio and the management of the money, what sort of risks should we be sort of thinking about here? Because you sort of touched on that.
Yeah, and that's the thing. People sort of get caught up in that. At the moment, it's all about the volatility risk. But the real risk is not having any volatility and not having any growth. Like that's a much bigger risk over the long, medium term than short-term issues at the moment. So as long as we've got those buffers and everything in place, then we can go through these periods and we should expect them in advance. It shouldn't be a surprise. Each time it is something different, a different cause and a different outcome and a different scenario, but it shouldn't be a surprise that it actually occurred.
Yeah, okay. No, that's... And just on that, risks and from a flexibility point of view, obviously the way, and you spoke about the bucketing strategy and how you allocate a couple of years worth of cash or incoming cash. How flexible are a lot of the sort of strategies that we're sort of putting clients into? And
look, we can change all those, but it's really asking the right questions. So, instead of just letting headlines run your life there, just ask yourself, particularly in 2026 there, that, does this change my income need and what's going on? And in the short term it does, because cost of everything is pushed up.
Yep.
Is that going to be the same long term? Maybe, maybe not. Chances are, when we're recording some of these, there's things going on over in the Middle East. You get a positive news, oil can drop 15%, negative news, it can go up. So is that long term? Potentially not. Does it change my time horizon? Well, hopefully not. We still want a long-term time horizon that we're working towards, but people get suddenly short-termism, worried about tomorrow. Oh, the portfolio's down, I feel miserable. The next day it's up, I feel great. We've got to get out of that.
Yes.
And move away from those. And does it change my plan, or is it just emotions today?
So if someone's sitting there and they are, because that's real, people would be sitting there worried about that. Any sort of pointers for for someone.
I'm just harsh now after all these.
No, I know you are. That's why I want to see whether there's that soft side. But no, genuinely, is there things that
some
to
people
distract
get
them?
softer with the conversation,
Right.
And then there was a couple last week, and I can picture the conversation. It just got the point of you've just got to stop. You've just press reset. You are in a loop going, what if so let's play your scenario. So everything drops, the share market's terrible, it's dropping, there's walls and everything there. I'm going to run all that and take it out of the bank. Well, in that scenario, if everything goes to hell in the handbasket, there is no bank, there is no money, there's nothing to buy, there's no food, there's nothing on the shelf.
Yep.
Is that where we're going? Because that's the only way this logic that you're in, loop,
Plays out.
finishes. Or do we go the other way and the world finds a way, and history would prove that's probably the better method statistically to work towards. So that, and normally something like that or a conversation to that effect, people might have a little joke or a laugh and then go, oh, okay, that's, but there's a bit of logic behind just planting the seed of, oh, okay, maybe I am catastrophising.
Yes.
Because they see the telly, they get scared, they talk to friends. People get in a room, I had people coming telling me, oh, silver's gone through the roof a few months ago. Well, I've changed how they made computers. And I'm, about the sixth person was when I did jump on them. I'm like, seriously, they have not changed how they make a frigging computer in the last 8 weeks. It just didn't happen. I've Googled, I've looked, I've chatted, I've everything. Didn't happen. What happened was there was, Russia and people in China and people in India were worried about what was going on with gold. They couldn't afford gold. They piled into silver. It rocketed up. Then they realised that trade wasn't playing out. It rocketed back down, and people were ringing, and I went, just go onto Google, type in silver price last 20 years. You have a look. I can't tell you in good conscience that looks like a great investment. It's dead flat with one spike.
Yep.
Doesn't make sense to me. Would I chase the spike? No. So it's just asking the real questions, not taking the guided tour.
Yes.
Because I think in society, people tell someone something and they tell their friend and they think they're an authority, so they listen and they pass it on.
Yeah.
I'm sort of the anti of that, which sometimes isn't popular, but, other people you talk to and they've actually researched and they tell you all about it. Great, love that opinion. You actually went and researched, factual, backed it up, and if you want to know more, actually go and check out this site. That's helpful.
Yes.
Just the guided tour sometimes and people getting that woe is me pity party, it's more destructive than it is helpful.
Yes. Yeah, and like you said, it can be that downward spiral. So what about the sorts of things that people can focus on, things that they can control, obviously?
So you've got the big levers out there you can do. So that's spending flexibility, covering that sort of essential versus optional. All right, if markets are down, do I really need to go and buy the shiny new car? Or is petrol expensive and I'm probably not driving as far and maybe I'll push that off 6 months?
Yep.
And, I caught up with someone and they're in the car industry, and it said they'd sold their most record number of plug-in, low-cost Chinese EVs in history. And I went, that's not short-termism, I don't know what is. So these are cars sat there, couldn't sell, didn't have demand, suddenly petrol's gone up, we're going to buy them now because this out's going to be forever. I'm going to beat everyone in the market. Will it be, won't be? I don't know, but it seems like potentially a reaction there. So that was flexibility they didn't need to spend. Retirement date, some people put a line in the sand with a date. Oh, it doesn't inspire me a great deal. I'm going to work for 40 years at this company. I'd rather people be ready, comfortable, and retire to something, not from something. So having something they're really looking forward to, it could be a time of season, could be a time of year, and that brings it to a head, as opposed to, I picked a date. Why did you pick that? I don't know. Well, 10th of December this year sounded like a great day.
Yeah. Well, I know that we've had clients recently that will very much they'll fixate on a particular date, and then through your conversations with them, that they by the end of it, the strategy had effectively, their thinking had changed.
I was mean again, Oliver. So I like to ask questions in those meetings. So I was like, okay, is there anything big ticket items and things that we wanted to do, because it was their choice as to when they just picked a date. Did you pick a date? Yeah. Was there any reason? Not really. Okay. Was there anything we needed to spend, anything we wanted to do? Is there anything working 6 more months would achieve that you're like, no. Okay, then a bit more conversation. Oh, there's a kitchen needed doing, and there's probably a car that needed upgrading, and then, the wife was thinking, oh, well, actually, I actually probably wanted to finish this project to December. All right, so all of a sudden now we've got a plan. We're both going to work till the end of the year. We're going to get the kitchen done. We're going to have the car. We're going to have everything ready. You're going to finish your project. We've got a plan to work towards. Great. Let's check in October, see how everything's on track, and move forward from there. Because the worst thing is people retire day one and then take a big chunk of money out to go and do those big ticket items, and it scares them. They don't do the kitchen, they don't buy the car, or they do and they panic.
Yeah, no, that's fantastic, and I think that sort of ties into one of the other sort of themes that you're talking about on the show. Is retirement is bigger than just money, isn't it? We have our dream board in the office where the clients send the photos through of milestones, achievements. We celebrate them in our office, but that's a key part of, I guess.
Once we've got the foundations of that right, they know they've got their income, we've got the income mix right, we know it's coming in irrespective of markets up and down, and then we've got our cash buffers. Yeah, it's bigger than the money because we've taken care of that. We don't care what the market does. We're still relevant. We're still going to keep an eye on those scenarios. It's not that we do nothing. We did, as an office, we had more manager changes in the last 6 months than we've probably had in a long time, and that was just recognising some structural changes that were happening in markets.
Yes. Yeah, no, that's and then just on that, because I know obviously we're constantly reviewing the portfolio side of things.
Yeah.
How often would you suggest clients, review their own affairs? Obviously, clients of ours, of RFS Advice, obviously we're very structured with that approach because we understand the importance. But what about those that aren't, maybe not getting advice? How often should they be at least thinking about it and reviewing their situation?
Yeah, even if they put a reminder in each 6 months, there would be a great trigger point to, you know what, that pops up, gives me that reminder, check in.
And what should they be thinking about? What are some of the things that you'd be thinking?
So you're probably looking at, is my cash buffer in place? Yeah. What big expenditure do I come up with that next 6 months? So what are the next, 6 months looks like? What do I think I'm going to spend on that? What big ticket items is there I want to tick off in that time frame? And then that'll give you a really clear outlook as to what that sort of expenditure profile might look like over that next 6 month period.
Mm-hmm. But just getting that clarity and stopping and reviewing it has to reduce the stress. Like we see it when clients come in and when they leave. It's just...
Yeah, and when markets are like this, some people, yes, you can still go on your trip.
Yeah.
That was one of the things when we designed the method and how we manage money and why we reweight and why we separate income and growth, have all those cash buffers, is I don't have a situation where someone can't go on a trip, they can't do something because of what's going on with investment markets. So that's really the key, is we don't want people to miss out on life experiences that are important to them. So from that perspective, we want them to be able to do that irrespective of what's going on different markets there.
Yeah, no. So I'm just conscious of time. You sort of had some practical actions that people can take now.
Yeah. So
from that, sort of run through those, if that's okay.
Yeah. So you got to make it achievable as well. So you got to set goals that are realistic and within your spending abilities there with regards to that. So knowing what's discretionary and what's essential. Having that liquidity plan, so if I do want to do something and I've got some reasonable sort of medium or short term, let's have the cash, let's allocate it. So our type of reviews, if someone comes in, great, I've got this big holiday planned, when it's it, let's get the money out of the portfolio, let's have it in cash, let's have it ready to go. I want you to go on that trip. I don't want to have situations where so many people don't loop back to that trip or back to that adventure or back to what they're actually doing.
Yes.
And then they miss out on those. So that's really the key to making sure that when you've got the foundations and everything right there, then you can look forward to the things you want to and plan for them in advance.
Yep. No, that's fantastic. And, I've just wrote some points down here. It's got, you don't retire because the world feels calm. You retire because your plan is strong. And I think that's something that...
I did like that one there. And we've got our retirement ebook there, that toolkit ebook on our website there, www.rfsadvice.com.
Well done.
Right.
Wow.
Even Oliver's giving me the nod.
Gee, that's...
and that's got all those broad topics that...
Absolutely.
That they don't seem that relevant until you're going through that journey. And for people in retirement who are sitting there, but a refresher is always great.
Yes.
Very few people come in and have everything tucked away, life changes. And one thing, working with our team, and Greg and I have been doing a lot more training with sort of the younger team members, it's just letting them know that when people come in for reviews as to what's actually coming on with that. So not having that predetermined, here's how the review's going to go, here's the conversation. What's top of mind, what's been happening in your life. No idea where that conversation's going. Some days they're really happy, others they're really sad.
Yes.
And sometimes they're really big ticket items of expenditure forced upon them and everything in between. And that's what you're sort of dealing with. But having that 6 monthly check-in really gives that point or line in the sand to go, you know what, I'm going to look at it at this point.
Yeah. But I also think, given your experience, I think it's, the types of questions to ask, the sorts of things. So I think it's that conversational piece and knowing, how to get the answers out of clients. I think that's really the secret and the...
Yeah, well, people don't know what questions to ask.
Spot on.
But certainly that short-termism in uncertain times is, you've worked your whole life. You don't want to let some event that will come and it will go. And every time it will be a different event. You don't want that to dictate that something you've worked towards for 30 plus years.
Yes.
And there'll be so many people will just push it off, and then we're going to do a follow-up podcast to this around, particularly on retirement and what to think of, and some actual quotes.
And we've got some the survey that we ran with clients.
Yeah, so these are from actual retirees, not our answers. What we thought the answers should be. We went and asked a whole heap of retirees. Why is that? Because we've got a client base full of them.
Yeah, let's ask the questions.
Let's actually ask the people living it and breathing it, and what did they come up with? So we've devoted another podcast to that. But really today I wanted to talk about that retirement and uncertain at times, because it probably more so is when people need to reach out. And online systems are great and all those sorts of things. It's not someone in your team to work through with, and it's not always just, where business clients join us as well. We have quite a number of those, and I was talking to Greg about one in particular the other day that came in, and didn't sound like things were going great, and we're talking through cash flow, and I'm putting up the board. Okay, well, you just need this goal to do X number of deals per month and tick those off and continue on. Oh, I'm doing those, and I'm like, okay, there's a different problem there. I think the issue is you're sitting at home and you're isolated and you're both living in this, and she's going, well, how's work? Oh, it's not going as well as I think. And I'm like, mate, you're so far ahead of where you actually had planned, and where the cash flow was, it's not funny. But there's no one to share it with.
That's
so
right.
It wasn't a numbers issue, it was a support issue, or having someone to cross-check with. And that, from our perspective, working with us now, that will be our conversation. So we're going to check in 6 months. I want to know, did you do your 3 deals or your 4 deals for your month?
Correct.
That's the question I'm going to ask. So you're on notice. That's the question. So it's not going to be a surprise. It's going to be a happy, sad, something in between.
Yes.
Why is that? Because everything else is going to take care of it. We've done it.
You've got structure right.
I've done an Excel spreadsheet.
Fancy that.
Greg.
Wow.
You wouldn't have believed it. We might have built a cash flow out. Josh did as well. He's as bad as me with that. He loves the Excel.
Correct.
And we know that that's something he could control.
Yes.
If you do that, everything else takes care of itself.
Yep.
So you don't have to focus or worry on everything else. That's your primary goal. And that really can give some clarity. And retirement's no different. What do I need to focus on? Instead of focusing on everything that everyone is at the moment, things they can't control, let's work on what we can control. How can we control what we do have control over? And cash flow and how much you spend is one of the keys. But yes, there are fixed costs, and they've gone up.
Yep.
You can yell into the wind.
That's the reality of it.
Still gone up.
Yes.
Yep.
Yeah. No, look, I think that's a probably a great point to finish on. And if today's conversation has raised any concerns, obviously we'd love to hear from any of the listeners.
How would they find us, Greg?
Oh, that would be rfsadvice.com.
Okay.
So there we go. So I'm glad I got that right. The pressure was on. But as Troy said, there's a lot of information on our website. If you have a look at that retirement toolkit, I think, is a great piece of work, because it does dive a lot deeper.
How much does the toolkit cost?
It's actually free.
There you go.
There we go. So we wanted to provide that as a resource for our clients, for the public, for anyone that is interested or considering retirement. So I think on that note, we might finish up there.
I think we've done fantastically well, because I'm going to own up. We might have had a little laughing fit at the start of this. I did not think we were going to get through this one, because we do enjoy this. It is a lot of fun, and it should be fun. And this topic was something people are asking, and it's that juggling between telling people, just calm the farm a little bit here. We just need to do some breathing. Jump on the Smiling Minds app and download and take some breaths and
go for a run.
Yep, go for a run. Just step back a little and then just from a calmer place, let's make some decisions and have some conversations.
Spot on. Well, mate, on that note, thank you very much.
Very good.
Oliver, thank you. It's always a pleasure. There we go. We got Oliver to speak, but look,
he'll edit that out.
He will definitely. So, look, until next time, take care. Thank you.